Welcome back to Investing Talk Podcast.
It is fantastic to be back, and today we're looking at Palo Alto Networks. And this really isn't just another cybersecurity stock. We are talking about a company managing 1.5 trillion network events daily while successfully pivoting to AI-driven security.
As usual, before we start, subscribe, like, and comment to this video to support the show. But yeah, 1.5 trillion events, that number is, it's hard to even wrap your head around.
It is massive, and it's exactly why we need to talk about them today.
Right, because setting the stage here, the big conflict on everyone's mind is whether this recent sector-wide drop we've seen is a warning sign, or if it's actually a massive buying opportunity for the industry leader.
Exactly. Is the cybersecurity boom over, or is it just entering a new phase?
Well, let's get into the fundamentals and find out. Looking at the numbers, I pulled up their fiscal year 2024 revenue, and the top line is big. It's $8.03 billion.
A very healthy number.
It is, but, it represents 14% year-over-year growth. And in the high-flying tech world we're in right now, 14% sounds, it sounds almost a little boring.
Right. If you're comparing it to an AI startup growing at 200%, sure, on the surface it seems slow.
Exactly.
But you have to look at the quality of that growth. If you dig into their next-generation security, what they call their NGS segment, the annual recurring revenue for that specific area surged 33%.
Oh, wow, okay.
Yeah, that NGS ARR hit $6.3 billion.
So the newer high-tech engine is actually rocketing.
Completely. They are successfully transitioning away from just selling traditional firewall boxes and moving toward what they call platformization.
Platformization. I see that everywhere. It sounds like pure corporate bingo. What does that actually mean for the folks buying the software?
It's a huge shift. Historically, if you were running security for a big company, you'd buy a firewall from one vendor, cloud security from someone else, endpoint protection from a third guy.
The Frankenstein approach.
Exactly. You end up with 10 different tools that don't talk to each other. Platformization is Palo Alto basically saying, hey, buy everything from us. It's a unified platform.
So they become the central nervous system for everything.
Right. And that strategy is incredible for their efficiency. Just look at the discipline they have. They are operating with 77% gross margins.
77%. That is just beautiful to see.
And 28% operating margins. They run a very tight ship.
Which I imagine generates a ton of free cash flow.
A massive amount. And they aren't just sitting on that cash. They are aggressively using it for M&A to build out that platform.
Yeah, I saw they picked up Chronosphere for something like $3.35 billion.
Yeah.
And Talon Cybersecurity, too.
They are buying the absolute best puzzle pieces to make that unified platform pitch a reality.
But let's play devil's advocate. What's stopping a competitor from just coming in and undercutting them on price? Where is the competitive moat?
The moat is incredibly deep. First, you have that unified control plane we just talked about. They serve 85% of the Fortune 100.
That is a lot of massive enterprise clients.
Right. And once you are integrated into a global bank's entire infrastructure, the switching costs are astronomically high. Nobody wants to rip out their security system to save a few bucks. It's too risky.
You don't change the locks on the vault unless you absolutely have to.
Exactly. But the second part of the moat is the network effect. Go back to that 1.5 trillion events number.
Every single day.
Every single day. Because they process so much data, their AI gets smarter faster than anyone else's. If a hacker tries a brand new exploit in London, Palo Alto learns it instantly and blocks it for a client in Tokyo a millisecond later.
So size creates intelligence, and intelligence attracts more size.
It's a snowball effect, and their AI is hitting 99.7% accuracy.
That's incredible. Do we have any specific data on how their tech actually stacks up against the competition?
We do. Look at throughput speeds, basically how fast they process transactions per second, or TPS. Palo Alto Networks hits 1.44 TPS.
Okay, 1.44. What's the baseline?
Well, Fortinet comes in at 0.52 TPS.
So Palo Alto is nearly 3 times faster.
And Cisco, the old giant, is at 0.05 TPS.
0.05. Wow, they're not even playing the same sport.
It shows raw performance dominance. Plus, in the 2023 MITRE evaluations, they hit a 100% prevention rate.
100%. You literally can't beat that. So the fundamentals are an absolute fortress. Let's pivot to the charts, because the market doesn't always care about fundamentals in the short term.
Oh, the technicals are telling a very fascinating story right now.
Yeah, there's been so much volatility. It's currently labeled a trending stock with highly unusual volume, And we just saw a recent 3% drop.
Right. And nobody likes a 3% drop if they're holding the bag. But context is everything here. This was a sector-wide sell-off.
So it wasn't just Palo Alto stumbling.
Not at all. And this is where relative strength is so important. While Palo Alto fell 3%, look at their high-growth peers. CrowdStrike dropped 11%. Zscaler dropped 11%.
Wow, so relatively speaking, Palo Alto barely flinched.
Exactly. That implies massive institutional support. It means investors are looking at the sector panic, and they are selling the rest, but they are holding the best.
A flight to safety, but staying within the industry. And I want to ask you about the volume analysis, because I noted some unusually high volume recorded on February 23, 2026.
That volume spike is crucial.
Some people might see a drop on high volume and think it's panic selling, everyone rushing for the exits.
You could read it that way, but given the relative strength, I interpret it as a flow reversal.
Meaning the smart money is stepping in.
Exactly. The sell-off is happening, retail might be getting scared, but institutions are buying up those shares. They're basically saying, thank you for the discount on a premium asset.
They wait for the fear and then buy the quality. Makes sense. But we have to bridge to sentiment here, because if they are the best in the business, why is the quantitative sentiment score sitting at exactly neutral? It's a 0.
The neutral score isn't about Palo Alto's performance. It's about a macro fear that's dominating the news cycle right now.
Specifically regarding Anthropic's Claude tool, right? The fear that AI is going to disrupt the entire cybersecurity industry.
That's exactly it. People are worried about AI writing code that's so secure we don't need firewalls, or AI agents replacing human analysts.
So the neutral score is just a reflection of that existential sector fear.
Right. But look at the analyst defense. Wedbush officially came out and labeled this sell-off an overreaction.
And the CEO has been pretty clear on this too.
He stated plainly that AI is not a near-term threat to them. It's a tool they are already leveraging.
Even with it being a trending stock, the mood is definitely cautious. But people forget the institutional footprint here.
Yes. 85,000 organizations rely on them. This is not some speculative software tool. This is digital infrastructure.
Right. You don't just turn off your enterprise security because Anthropic released an update.
Yeah.
But let's check the bear case, because we have to look at the risks fairly.
We do. And the AI disruption fear is the biggest one. The Anthropic factor.
The fear is that Anthropic's Claude Code security tool is the beginning of the end. The bear thesis essentially asks, will AI eventually write code perfectly? And will AI agents just replace security operations centers entirely?
It's the ultimate disruption question. If the AI fixes the vulnerability before the hacker even finds it, do you need the massive Palo Alto platform?
That's a scary thought for a shareholder. And then there's the business execution risk. You mentioned that $3.35 billion acquisition of Chronosphere.
Yes, the integration risks.
Large M&A deals always face indigestion. Cultures clash, tech stacks don't align. Can they actually integrate this cloud observability tech smoothly?
It's a fair concern, but here's the rebuttal to both of those bear points. On the AI front, Palo Alto is leading what they call precision AI. They aren't waiting to be disrupted.
They're doing it themselves.
Exactly. Through their Cortex XDR, they are using AI right now to reduce security alerts by 98%.
98%. Because alert fatigue is the biggest problem for human security teams.
They are drowning in noise. Palo Alto is using AI to filter out the garbage. So they are the ones using the AI, not getting beaten by it.
Okay, and what about the integration risks with Chronosphere?
Well, look at the proof. That 33% ARR growth in next-gen security suggests their integration of past acquisitions is going incredibly well. They have a proven track record of buying tech and successfully plugging it into that unified platform.
So they've earned the benefit of the doubt on M&A.
I believe they have.
Well, we've covered the fortress balance sheet, the network effect, the technical resilience, and the AI fears. Let's move to the final decision.
It's time for the verdict.
What is the score based on all of this?
The final score is a highly bullish score of 9 out of 10.
A 9 out of 10. That is definitive. Give me the summary thesis. Why a 9?
The pitch is simple. Palo Alto Networks is the ultimate winner of the platformization trend. They have the 77% gross margins. They have the massive 33% NGS ARR growth. And they have a nearly unbreakable moat with the network effect.
And what's the time frame for investor looking at this? Is this a swing trade?
No, this is a multi-year hold into FY 2027 earnings. You buy it, you park it, you let the platform grow.
So what's the closing argument for anyone still worried about the recent dip?
The recent drop due to AI fears is a pure overreaction. The cybersecurity industry is consolidating rapidly. The smaller niche players are going to disappear, and Palo Alto Networks is the one eating the market.
They are the apex predator in the space.
Absolutely.
That's the verdict. Don't forget to subscribe, like, and comment to this video to support the show.